stocks and shares ISA portfolio update. So if you guys look at the S&P 500, we can see over the last month is down 8.82%. But because it did hit a low, but obviously we did have a recovery. Once Trump tariffs were like, okay, we'll have exemptions for this. But obviously since Trump tariffs continued to the panic surrounded them, continued to ensue, then we have just pulled back on all of the gains that we have had. So obviously that relates the same to Tesla, and if these tariffs are even because they're to do with the automotive industry, Tesla are getting hit extra hard. So if we actually go into Tesla, over the last week we have seen a bounce from the low. That was mainly due to the Q&A that Tesla took, that the hands-on meeting that Elon took, just to kind of ease the nerves, for the employees, investors. I thought it was really well. It reiterated Tesla's like long-term mission. With Optimus, full self-driving. It was really great. It was really well received. The stock price was up like 20% from the low, and obviously introduction of tariffs, sort of like 25% tariff on electric, or just all vehicle imports that are just made outside of China. And obviously we have, so due to that we've had a little bit of pullback. Obviously, I do think that in terms for Tesla, this has been overdone. We do know that, Tesla makes all of its vehicles in the US, so it won't be hit like full on with the tariff. Trump has said that it's based on how much of the vehicle is made in the US. If 100% of the vehicle is made in the US, you won't get a tariff. Obviously, some of the parts of the vehicle, like the batteries, they do get imported from China. So although the actual cars built in the US, and the majority of it is built in the US, that's in terms of the supply chain, they do get imports from China. So to say Tesla will be impacted, we won't go unscathed. Everyone says, because Elon Musk's in government, he's gonna speak to Trump and Tesla's gonna get like exemptions, and obviously it's conflict of interest. But no, Tesla's not going to be exempt. It's not getting special treatment from any other company. So yeah, Tesla will be affected. If you look at the 1 day, we see down 1.3%, and obviously the week it's still up, but it was coming up from a low. So yeah, what does that mean for my portfolio? Well, since the last update, my portfolio is up. I'm now sitting at £76,000. Currently up 3.55%, up to £2,600. Obviously my average price is $250, £193, and obviously just because it's currently sitting at $260. So yeah, I'm basically break even. I'm slightly up. If we look at what that means to my portfolio, my portfolio, I do over the last year I have a rate of return of £13,000. Obviously, a lot of that has been like money put in. If we look at my net deposits, £78,000, and look at the value, I'm slightly down. If we look on the 3-month chart, I'm currently got a rate of return of minus 41.4%. Just because if you look at the 3-month chart on Tesla, we're down 39.7. So yeah, pretty much mirrors that. Just because I'm all in on Tesla. We did get a point where I was, below, kind of like not breaking even anymore. But obviously we did have a little bit bounce back, and now technically my net deposits are still higher than my current value of my portfolio. That is only due to, I did sell some shares at a loss. So although I'm showing a green here, I have had losses from elsewhere. So I'm currently sitting at 382 Tesla shares and allocation of 100% Tesla. Obviously, when I do buy other stuff, this allocation will change. It's kind of, I know it's a bit boring. It just kind of all be in Tesla, but I just see so much opportunity when it comes to the stock, and generally because it's just front and center of all of the drama surrounding Elon Musk, it does get. Obviously, in my opinion, nothing in this video is financial advice, but I do think it gets overhurt, which is why, like, when it comes to news, which is why, I wouldn't recommend doing what I'm doing, and going all in, because this is money that don't need for the next 5+ years. So it's not like if this went to zero, it's not like it's the end of the world. Like, I'm still very young. I'm 22 years old. So, most people my age haven't even started investing or thinking about their future, obviously. So if it all goes to zero, then then I'm basically at the same point as everyone else my age. So yeah, I wouldn't recommend doing what I'm doing. I'm in a very unique situation where I've basically been saving pretty much all of my money that I've earned since 18, and it has made me amass this portfolio. But yeah, if you're in your 30s, 40s, yeah, definitely do not do what I'm doing, because yeah, if I was in my 30s and 40s, I would be taking a different strategy as well. Um, but yeah, just generally how the way I look at it is, as you get older, your risk tolerance, because your time horizon changes, your priorities change in life. Then obviously you change your risk profile as you age, and obviously when I age and I get into wanting to buy a house and start a family, then my risk profile will change, and obviously that will be reflected in my portfolio. Um, I mean, as it stands right now, I own 382.1 shares in Tesla, and that leaves me with £76,000. So, anyways, thank you so much for watching. Please make sure to like, subscribe, and share with anyone that might be interested in my update. And I'll see you in the next one. Goodbye.